Eric Sprott, Rick Rule, and Keith Newmeyer are three successful resource investors coming together for one simple reason: to buy cheap assets from distressed companies and seize this once-in-a-decade opportunity to buy gold, silver, and other mineral projects for pennies on the dollar. First Mining Finance Corp., trading on the TSX Venture under FF, a recently launched venture with the sole purpose to acquire advanced stage natural resource projects, and starting on day one with 18 projects. Management has already identified over 60 additional projects to acquire. Learn more about First Mining Finance at futuremoneytrends/investright.
Well, hello everyone, and welcome into crushthestreet.com. I am Kenneth Amanduri, and I'm here with David Trungale. He's the owner of tradertours.com, and he was recently interviewed on our sister site, futuremoneytrends.com, and he talked with Daniel about silver. And David had made money in silver at 35 and it going down to 25. And on his YouTube channel, he made a significant call that it would go even further. And it collapsed from that point. And he was right. And I'm excited to have him on today because we're going to do a follow-up. David, thanks so much for coming on the show with me.
Well, of course, Kenneth. Thanks for having me on.
Absolutely. Well, David, I just wanted to kind of, like I said, follow up with you, kind of ask you a little bit about what's going on in the silver market, precious metals in general, and just kind of get an update since we've kind of last heard from you.
Yeah, absolutely. I'm still bearish on silver, first and foremost. I want to throw that out there. And what we're seeing here is sort of a consolidation. It's been going on for about 7 months now. The long-term trend is still down, so this is sort of a pause here. And I still think silver is going lower. We obviously have some support around that $14, $15 range. And there was a little minor rally back in January where I think it poked around 18. So we're sort of trapped at that 14 to 18 support and resistance level. But again, Kenneth, me being a chart technician, this is something that I've addressed before. I'm not that big of a proponent of following the fundamental story, and the reason why is because the market really is a net result of buying and selling. So you hear a lot of theoretical supply and demand numbers thrown around online, such as there's a shortage in the silver market and things of that nature, and a lot of the facts do appear to be well documented, but to me, the supply and demand that matters is really what's actually happening with the price action. Again, that's the supply and demand that counts. I talked about the banking manipulation before. Certainly you could argue that's part of this, but again, that's all part of the market. And if something really is manipulated to the downside, my argument is, hey, why would you want to own it? Now, you could argue that the manipulation will not last forever. That's another discussion. In the very long run, I've said this before, sure, I would bet on a hard asset over fiat currency, but more importantly, what is the long run? It's been a nasty downtrend here for 5 years, and I don't consider that the short run at all. I mean, that's a long time to be waiting. Right. And most of the investments I do, I shoot for a month-to-month, year-to-year percent gain.
So yeah, that's also I was going to ask you. You look month-to-month, so have your trades been month-to-month, year-to-year, or how has that looked in terms of what you've been doing, making money on the side here?
Sure. So it really depends on, again, what's actually happening. I got to be a little careful throwing a time frame on something. I've had trades, Kenneth, where I will enter and I will be out in a couple days because it's not developing the way that I thought. Other trades, such as Disney, the Walt Disney Company, I've been holding for years, and I've been buying more and more as the trend continues to develop in my favor. So the key here, and this is what really separates me from a lot of people, people like to label me as a short-term trader, and I think that's inaccurate. What I do is I simply respond to what the market is doing. Again, I might be in a trade for a few days, but ideally I will be in a trade for several months or years, obviously as long as it's performing well. Now, to reiterate on that, there's a quick story I wanted to share. There's a trading analyst. He's a friend of mine, Jim. I wanted to quickly address the subject of managing your position sizes, and this is relevant to the time frame that we just talked about. My buddy Jim, he made $1.7 million last year trading, and he only placed 10 trades on the year. And out of those 10 trades, he actually lost money on 8 of those 10 trades, yet he still walked away with a positive net gain of 1.7 million on the year.
Wow.
The reason why was because out of those 8 trades, he had very tight stops set in. I think he only had a 1 to 2% loss in each of those trades. And the 2 remaining trades that he profited on, one of them was an 80% hitter on the year, the other was 105%. And he held those, again, for the entire year.
So really managing the downside risk and maximizing the upside potential.
Absolutely. And again, Kenneth, markets are counterintuitive, and this is another point I've tried to hammer on. Most people, again, do the exact opposite. They buy more of something as it falls in price under the rationale that you're getting in at a better deal, there's more value here. But understand that it's obviously going down for a reason. The demand is not there. The big money doesn't want it. Even though you could have all the reasons in the world for something to go up, if the people with the deepest pockets are selling, you and I or anyone listening to this, we're no match for them. And it's something, this is sort of the philosophy of trend trading is, hey, you have to bet with the big money, not against it.
So you talked about, and I know this was in your last interview, that the reason why you were bearish on silver is because you noticed a lot of selling, and there was a lot of sellers in the market and talking about the big money and what they're doing, regardless whether it's the Federal Reserve or just traders or people in general that are selling. What are we seeing right now? Are we currently seeing that same sort of selling going on, or are we seeing some sort of consolidation that might be indicative of things are turning around?
Sure. So what I see here is certainly, it's a good point by you. It is a consolidation. But I would say that if you look at the longer term picture, and this is where trend trading gets a little tricky, is a lot of people are fooled. There was that rally back in January. People said, all right, we're ready for the next big upswing. But, we went back down and tested that support again. So to me, if you analyze a 3-year weekly chart or a 4-year weekly chart, those are some of my favorite charts to analyze because they show you the broader picture. So what I consider what's going on here, this is, again, it's a short-term correction in a long-term downtrend. It's hard to say exactly. So, it's really a neutral market the last 8 months. It's hard to say how long this will continue. I would say, hey, if silver takes out that support at 15 or 14, look out. It's really going to head down from there. But until further notice, yeah, I'm still bearish to neutral on silver. Again, this is a consolidation. I think that this is still a bear to neutral market. Even if I'm wrong about silver going, down below 12, I don't think it's a screaming buy. And I can confidently come on here and say, I do think it's going to be quite a while before we ever see silver back at 50 again.
So a lot of people in our audience are expecting silver to go up substantially because of problems with the government, the debt, fiat currency issues. Do you see any of this as a potential threat to your investments in the short term?
That's a good question, and my answer to that would be no. I understand the debt, especially in the United States, is way out of control. There are a lot of macroeconomic problems, but I really would like to encourage people to get away from this line of thinking that these things happen overnight. People say, oh, we're going to wake up and the Dow is going to be selling for 500 tomorrow, or we're going to wake up and silver is going for 2,000 an ounce. I mean, these are outlandish numbers. Sure, you can bring up hyperinflation as an argument, look back at the Weimar Republic, Republic of Zimbabwe. But again, just based on experience and some of the trading analysts I've worked with that, have been around for a lot longer than me, that help, pitch in with the newsletter and various ideas, experience tells me that, again, markets are slow, and this, unfortunately, is not a get-rich-quick operation, especially if you're buying silver. Again, I think it's more of a you're going to be sitting down in the ditches for a long time. But even with the Dow, I talked about this before, I'm bullish on the Dow, but do I think the Dow is going to go to 40,000 tomorrow? No. Markets unfortunately take time, and I would encourage people to get away from this idea that you just wake up and you get rich quick, or there's some sort of an overnight, explosion or implosion of the system, however you want to phrase it.
Yeah, it's kind of interesting. I mean, obviously 2015 it really kind of feels like a lot of things are building up. I mean, at least from that fundamental perspective, we've been 7 years away from the last major crash, and we've had the 7-year bull market with the stock market and precious metals have been down for a good 4 years. And it really, especially just, when you're looking at everything as a whole, it does seem like there could be a big correction with the stock market, and that could spill over into the precious metals, because maybe people start, getting concerned a little more, when they see unemployment spike back up, we go into an official recession, and maybe some wheels on the bus start to get loose and fall off, per se. And then, of course, you can get a little more conspiratorial and talk about things like Jade Helm and the blood moons and all those other things that people are throwing out there.
Yeah.
And, even natural disasters that are happening here in 2015. So is there anything in the precious metals, as far as technicals go, that says, hey, maybe there is something kind of about to happen? Maybe not on the conspiracy side, but just as far as, the recession goes, and the 7-year bull market that we've seen with the Dow Jones, and, any correlation, between that for precious metals.
Sure. Well, as far as the 7-year bull market goes, Jesse Livermore, it's a name that I may have thrown out before. He's a trader that I respect. He's obviously deceased now, but I think we can learn a lot from his work. And what he said made a lot of sense to me, is never try to predict the market, instead react to it. So obviously nobody, I don't care who comes on here or on CNN or who you are, whether you're Warren Buffett, Eric Sprott, myself, nobody can predict the exact moment when the market's was going to crash. What you have to do is react to it. So if you take me, for example, on a personal level, I sold out of the market back in 2008, not at the pinnacle, because again, me being a trend trader, there's just no way that I could have called the top, but I actually exited due to a moving average crossover system. I made a little video on my YouTube channel explaining this. It's a very simple method. I just threw on a 400 and 100-day simple moving average, and once the trend started to roll, that was my sell signal. Now, I didn't get out at the top, but at, again, the same time, I did exit the market before the brunt of the crash. Right. So, again, the philosophy of trend trading is, hey, you're never going to be able to buy at the bottom. You're never going to be able to sell at the top. But you don't need to in order to make a lot of money. We want to take a chunk out of the middle of a trend. And I think trying to pick bottoms or anticipate tops is a very dangerous game. So under the current assumption, yeah, it's still a bull market. And I know 7 years, you look at it and say, whoa, when's this thing going to come down? Well, if you look at the run prior, the bull market in the 90s, and especially, in the 80s, there was a little interruption along the way. Of course, we had the 1987 crash, Black Monday. But other than that, that was an explosive bull market for, 15 some years. So in regards to this, again, protect yourself, set in stop losses, manage your risk. When you have a huge liquid market like the Dow Jones or Disney, again, I really would argue that you don't just wake up and see that these things have collapsed 90%. Even 2008, that did not happen overnight. There were several months of exaggerated selling and a roll in the trend. So I do feel comfortable telling people, hey, you can still ride this bull. Just understand that you do have to protect yourself with stops, and understand that, of course, the trend could change at any time. But again, I like to escape that idea that, hey, you just wake up and you're broke, or you wake up and you're rich. Unfortunately, it does take time to compound your interest on your account, right, and so forth.
So you've kind of already addressed it, but maybe we can address the libertarian thought that might attack you on your thoughts that silver, you're bearish on silver, precious metals, and the thought of an overnight collapse and things like that. Again, you've already touched on it, but maybe you have a few more things to add to it.
Absolutely. So first and foremost, I do want to let people know I am a libertarian, and a lot of people look at me and say, well, wait a minute, you're shorting silver. How are you a libertarian? And my argument is that financial markets are really their own animal. What happens in the financial market is really a function of supply and demand, and that's it, buyers and sellers. So it doesn't matter if you love Obama or despise Obama. I could show you how to make trades where you're going to make money. And when you look at some of these basic philosophies or principles of the libertarian movement, I absolutely agree with limiting the government's authority. I think that in the long run, inflation's a problem. And I completely support capitalism and defending individual freedom. So these are all hallmarks of the Libertarian Party. And in no way am I trying to disparage all the libertarians out there. Understand that trading financial markets is an independent skill, and I think it's a completely separate subject versus macroeconomics or political thoughts.
Yeah, no, I totally agree. And I know it's kind of like blasphemy to go against precious metals, but
Right.
the truth is you're looking at it from an opportunity right now. And like you said, you are bullish on it long term, but right now, how can we make money today? And that's the kind of trades that you're doing. So having said that, are there any other substantial trades that you're looking at right now? I know you have a paid service, but
Yes.
is there anything else that you're looking at right now, such as silver, that you're bullish or bearish on?
Well, as I mentioned before, Disney has been a big holding of mine, and I've continued to add to my position. We had a very nice volume increase. I think it was back in February. I don't have the chart in front of me, but we had a volume burst that coincided with the upward price gap and went up about 7 points in one day, and we are in a very nice long-term uptrend. And Kenneth, you're very knowledgeable when it comes to fundamentals, and if you want to analyze the earnings and do your own analysis, I would encourage that. But again, I'm mostly a technical analyst, and I've said this before. You could have a company like Amazon that's reported negative earnings, and at the end of the day, it could still perform well. The stock could do well, and because really what matters is who's buying or selling. So yeah, I would say I'm bullish on Disney. I'm still bullish on the Dow. Yes, likewise with silver, there we're in a consolidation to the downside. The Dow Jones, we've been sort of in a consolidation to the upside. We've been hugging that $18,000 mark for quite a while now. I think eventually we're going to break out of there. But, it will take time. And as far as trying to do well in the short run, I think that's important because I've always said this before. If you can consistently do well in the short run, you will do well in the long run. If you can keep compounding your gains and do well in the short term, that will translate into a positive return. And one last argument I would say, again, I just really am not a fan of trying to pick 52-week lows. I know it seems enticing because you say, hey, I'm getting in at a good deal. But suppose you do buy the 52-week low, and after many years, it does eventually swing. Well, all right, let's say you buy silver right now at 15, and decades later it cracks 50. Okay, you make 3 times your money. Well, I think that just by trading on a technical perspective, you could do a lot better than that just by, again, rolling over your interest in the meantime. So that's my caution, my message out there to value investors is, again, just take the market for what it is. I know it's frustrating for libertarians out there, but I really encourage people to explore the subject of trend analysis.
So has gold been relatively comparative to silver in terms of the way it acts? And as far as the technicals go, I mean, do you ever go from one to the other? And just in terms of the buying and selling that's going on?
Yeah, the patterns are definitely similar. Silver is a little bit more volatile, a little bit more aggressive. I would say it's fallen quite a bit more than gold, but the general pattern is, and this is true with the mining industry, the
Right.
precious metals, the mainstream stocks, the financials, whatever. They tend to move in packs. And as a technical analyst, I look to short the weakest performing stocks in the weakest performing sector.
Mm-hmm.
And on the contrary, I like to buy the strongest performing stocks in the strongest performing sectors. But yes, the patterns with gold and silver are similar. It's just, they've been really idle the last several months and years. And again, even if I'm wrong about them falling farther in price, I just, I don't see this explosive upside that you hear touted on the internet, at least in the short run, I don't.
A commodity that obviously got hit pretty hard in 2014 and is still pretty beat up is oil. Was that something that you guys were following?
Yeah, I actually had a put option on one of the oil ETFs, and I did pretty well on that. And since then I've exited that trade. And again, I do have some long-term puts here on gold and silver, but again, I'm neutral to bearish here. I mean, there are better trades I think out there than to continue to short commodities. I'm pretty heavy, like I said, in some particular stocks that I have on my website there. But yeah, so if anything, if you're a libertarian, you say, hey, I'm not going to short silver, that's fine. Again, I would at least at the minimum recommend dabbling into some of my other ideas here. So, that way you can see the results for yourself and make a determination from there. But yeah, still neutral to bearish on commodities and still bullish on stocks for now.
So actually, commodities as a whole, including oil, or just precious metals in general?
No, I would say again, this includes the whole commodities basket.
Right.
Oil is not something I've addressed as much because, again, the gold and silver is sort of the leader among the libertarian movement, and that's the hot subject. It's what everyone talks about, and it's sort of really evolved into a big movement, as Daniel said when I was on there last time. But a lot of the, like I said, the oil put on the ETF I got out of, and I'm just not really short on oil or long in it, at least, with my own capital. I don't have any specific trades placed on it, but overall, I'm still, bearish to neutral. I just not really placing any trades on oil at this time.
And then one last topic. Do you follow currencies and, the dollar? Does that play into the way you make trades in the precious metals, or is it, like you said, just the technicals?
Yeah, I look at it from a technical perspective. I do analyze currencies a bit, but for the most part, again, most of the trades I do, Kenneth, they're really on the NYSE, big liquid companies. I don't really, I look at each investment, let me put it this way, each individual investment I analyze, I look at it from a technical perspective on that basis. So yes, these things are related. As we talked about, oil, gold, and silver, the commodity sector tends to move together, but whenever I pull up an individual chart, I want to see what's actually happening with that particular investment. Show me the action, what's actually going on. The reality of the numbers, looking for, again, different volume spikes, things of that nature. So yes, I do focus on primarily on the individual chart.
Well, there you have it, everyone. David Trungale of TraderTours.com. David, thanks so much for taking the time to talk with me today.
It's been a pleasure, Kenneth. Thank you again for having me.
I appreciate it.